Hello, guys. Hello, everyone. Fernando Ferrari here with Ferrari Realty Group with EXP Realty. I hope everyone is doing great. The weather is still holding up fantastic here in the area of Hamilton. And today we're coming live. We have a special guest, Victor Hub from Capital Lending Center, our expert in mortgage. Is a mortgage broker in the Toronto GTA area, and we have some interested questions for him today. Everyone is talking about hi Victor, how are you? And everyone is talking these days what is going to happen given this low inventory in the market, and the market's going crazy. There are no houses very much to buy these days unless you want to go in competition. You want to have 1, 2, 3, 4, 5 offers, and people are a little bit of confused on what should be doing right now. Should you put an offer and multiple offers? Should you just wait for the market to crash? The optimists are waiting for the market to crash, and the conservative people are buying right now just in case the market continues to go up. So that's very much what I'm going to talk today. Should we buy these days a home if we are first-time buyers, new immigrant, or should we wait for the market to go down? Is this going to happen? Well, that's why we are here today. We want to put some facts, some stats for you, and hopefully this can clarify a little more your thoughts. So right now, for example, in our market today, we had 97 listings. And this time of the year, generally, we have in 24 hours about 200 to 300 listings. And we had 319 sold. So for you to understand this, we have 97 listings against 300 solds. That's telling me that inventory is running out very fast and the solds are going up very fast. So it means that for so many buyers, we have just few small listings. That is telling me the market is still very, very active, and we call it a hot market. So, for example, in the area of Hamilton, we've seen in 2020 577 listings, and we have 444 in 2019. This gives us plus 30% the amount of homes that were listed in 2020 compared to 2019. Okay, and the average price, for you to have an idea, in 2020 they were at $661,000. Comparing to 2019 at $528,000. So it just is 1 year, Hamilton seen a growth of 25%. So this is very much a unique situation given the low interest rates that we have these days, and the COVID-19, the pandemic. So all these elements have done a tremendous contribution to this low inventory. We want to take another area, for example. We have Burlington here. In 2020, we had 172 listings against 108 listings in 2019. So even though it's low inventory, we've seen more listings in 2020. So, and we have this was a plus 59% compared to 2019. And the average sale in Burlington in 2019 was 780,000. Against 961,000 in 2020. That is an upward of 23%. So, Victor, question for you. Why is this low inventory is here if the market is so hot? Why people they don't start selling their homes and cash in here?
Well, the low inventory, it's because interest rates are low and people are scared of the pandemic. But they're scared of the pandemic. They're not listing their homes, and the market is really a seller's market because demand is so high out there. Like you said, there's only I think you said 90 something listings, but 300 sold in Hamilton. That's because there's so much demand out there that the supply is not matching the demand, and that's what's driving up prices. And also, yeah.
Okay, and do you see the interest rates going up anytime soon?
Well, I don't see interest rates going up anytime soon. The Bank of Canada has kept the overnight rate at 0.25%. They had their last announcement in November, and I don't believe it's going up. They actually announced that they probably would not raise interest rate until 2023. So throughout 2021, we're projecting this low interest rate environment. Right now, I think prime rates at most banks are 2.45. The overnight rate's 0.25. Of course, you have rates below prime rate. Seen rates around 1.5, 1.6, 1.4 even. So these low interest rates are projected all throughout 2021, and it's projecting no hike until 2023 even.
Okay, so when you say overnight rate, can you explain a little bit, because it's a little confusion for people sometimes to understand what is an overnight rate?
Well, the Bank of Canada sets the rate, at the interest rate that all the banks have to follow, and the banks base that rate on the Bank of Canada's overnight rate. So the Bank of Canada has about 10 or 12 announcements a year, and they either lower the overnight rate, raise it, or keep it the same. It's been kept the same now for the past 3 or 4 announcements, and they don't project any increase until 2023. 0.25 is a very, very low. It's like historically low rate. Some people say it might even go negative, but that's hard to say. So all the banks, the big banks, all the lenders, they follow that overnight rate. If that overnight rate goes up, then the bank rate goes up.
Okay, and I have a question for you here. Is this historically the lowest interest rate that Canada ever seen?
Definitely. Since I've been following it, I've only been an agent 2 years, but of course I've followed the economy and the finance rates. This is the lowest I've seen in 20 to 30 years. It's very historically low rates. It's a great time to buy now. It's a great time to get into the market, to get a mortgage at this low rates, either fixed or variable. It's always with these low rates, it's a great time to buy.
Okay, the stress test is still in place for mortgages these days in Canada?
The stress is still in place, even though you might get a rate, say 1.75%, you still have to qualify at the stress test rate of 4.79. So even though you're paying that 1.75 rate, you have to qualify for 4.79% rate.
And this stress test, is the intention of this stress test is to protect the consumer, to protect the buyer, and that way they're not overextend themselves on the borrowing situation, correct?
Yes. So even though you might be paying a rate of, let's say, 1.75 or 2.25%, the government wants to make sure that if interest rates go up, say the Bank can raise their rates and interest rates go up to 2.5, 3%, or even 3.5, that you're able to make that payment at that higher rate. And that's why they set the benchmark rate, the benchmark stress test rate at 4.79.
Okay, thank you. Now, we had in our previous conversation yesterday, you mentioned something about immigration being a very strong part of what's going to happen to the market in the next little while in Canada. And could you touch a little bit in that?
Sure. Well, the government of Canada has increased immigration over the next 3 years to allow 1.2 million immigrants into Canada to increase the population of Canada. Of that 1.2 million in 3 years, 60% of them reside in Ontario. They immigrate to the province of Ontario and basically around the GTA area. And of that 60%, 60% of that is around 400,000 per year new immigrants come to Canada. 60% of that, 240,000 immigrants are residing in Ontario. They move to Ontario. Of that, 80% of that number look to purchase a home in 3 years. Basically, my calculations come down to about 80,000 to 100,000 new home buyers that are going to be purchasing in Ontario. Basically, most of them coming to the GTA area. And that, like you said, is going to drive up demand. And that's going to reduce supply even more. Imagine you're going to have over a year, maybe 80,000 new purchases. And they're all first-time home buyers. There's a lot of good first-time home buyer incentives. The incentive now, the Bank of Canada is going to change that first-time home buyer incentive starting in spring of 2021. to where before they would qualify in 4 times your income, but now they're going to qualify in 4.5 times your income, and they're going to increase that household income from 120,000 to 150,000. So first-time homebuyers on the old incentive probably would qualify for around 505,000. In the new rules for the incentive, the increasing, they would probably qualify for around 722,000.
Wow. Okay.
So that raises that by over $200,000 in purchase price.
Okay, and the mortgage that remain at 25 years max, correct?
You mean the amortization?
Yes.
The amortization is still at 25% max, yeah.
Not 30 years in Canada.
Well, we have 30 years, but for first-time home buyers, usually, if they're looking for the incentive, the first-time home buyer incentive, and usually first-time home buyers put less down payment down. So if it's under 20% down payment, then yes, it's capped at 25-year amortization. There are 30-year amortization products, but usually those are uninsurable, like over $1 million purchases.
Okay, with this 1.2 million new immigrants coming to Canada, this means that the condo market is going to get reactivated again. As you know, the condo market is a little stale at the moment.
I think it's going to infuse all the markets. Every market. You got semi, condo, detached. It's going to infuse all the markets because definitely the condo market is going to improve because the first-time homebuyers are not going to be purchasing those $1 million or $2 million, $3 million properties. They're looking at a price range of around the condo market. So that's going to infuse the condo market. But I think it'll infuse all the markets: condo, semi-detached, townhouse, detached. All these first-time homebuyers who we're talking about, like 80,000 in 2021, are going to come in and purchase their first home. So that's going to increase demand across all markets.
Okay, sounds good. So then the question is for you, and this is a big responsibility for you, is the market going to remain good to buy a home in 2021, or people should wait?
I always believe, the real estate markets always buy now. There's a saying, of course, I think we heard of this, Fernando. There's a saying, what's the best time to buy a property? It was probably 5 years ago because it's gone up in that 5 years. But the second best time is right now. And because real estate always goes up in value. And of course, as a mortgage agent, and you know this too, interest rates are so low right now. You're going to get a great interest rate for your mortgage. And just, I always say real estate is always a great time to buy now. Interest rates are low. You don't want to miss the boat. You want to be in the market. You don't want to be outside looking in and watching it and miss the boat.
It's not late to get into the market right now.
You don't want to miss the boat. You want to get in at any time. Now is the best time because interest rates are low, demand is high, supply is low. So I only see the trend continuing where prices are increasing.
Okay, sounds good. So then we remain in a seller's market. For those ones that understand what's going on, it's a good time to sell your home if you want to get maximum amount from your equity to do something else, get an investment, move south, retire, etc. But if you want to stay in the market, maybe you can move to the next property, given the situation that you create so much equity in the last 3, 4, 5 years. We've seen the average here for example, in Ancaster, the prices are going. It went 37% up from 2019. So people got 40% equity on their homes. If your house was 600,000, your house is $1 million today. So you got 400,000 equity. You can borrow to get an investment property or get a cottage or do whatever you want to do. I always talk
about first-time home buyers and getting a good mortgage. But you're right there. You could, if you're a current homeowner and you bought maybe, like you said, 2 or 3 years ago, you're going to have another 200,000, 300,000, 400,000 equity in your home. You can actually dip into that equity, refinance your property at this low interest rate, take that equity to buy another property, and then get more equity from both properties. An investment rental, might have positive cash flow, maybe a second home, a cottage home. There's all options on the table right now.
I know this one is going to be the last question for you, and probably I don't know if the number is there, because this will be a little bit of a speculation, but can we foresee any type of number or how the market is going to grow this year? 5%, 2%, 3%, 10%, or this is very difficult to...
It's hard to say. Nobody knows. We are projecting an increase, but nobody knows what the percentage. But, I'm projecting, like 5, 10, 15, even 20%. As the trend continues, I think you said the trend from last year was, 37%, right? So even if it
35% in Lancaster, 23% in Burlington area.
So that's even if it continues that, we're looking at another 23% increase year over year from now until 2022. And even if it increases half that, it's still a good increase at 11%, 12%, 13%.
Okay, Victor, thank you very much for coming over to chat with us for a little while. Your insight, your knowledge is always amazing to have it here in this area of Hamilton, Burlington. So if anybody needs a mortgage, Vic, we want to do a little bit of advertising here for you. If anybody needs a mortgage these days, how can they reach out to you?
So I'll leave my phone number here. They can reach out to me by phone. I work every day, 9 a.m. to 9 p.m. You can reach me any day, Monday to Sunday. My phone number is 647-355-8288. Or you can email me. Of course, I respond to my email. I try to respond to my email within the same day, if not the next morning. And my email address is my name, Victor Ha, @capitallend.ca.
Amazing, man. Okay, guys, thank you very much for visiting this live Facebook session with Victor. We got a lot of good info here for this year coming up for the market, and there you have it. The interest rate is going to remain very low. The inventory remain low. So if you want to jump in this train, in this roller coaster of real estate, this is still a good time. You're not missing the train yet. I think you're still in good position to get some equity under your belt if you buy in this year. And I think we're going to finish with these notes, Victor. Unless you want to add anything else, we are good to go.
Like you said already, it's a great time to get into real estate right now. You don't want to miss the boat. It's not too late. We only see forecasting increase in property value, and rates are going to continue to stay low, like you said, for sure throughout the whole year of 2021, and no increases they're projected into 2023.
Awesome. Thank you, Vic. Have a happy New Year to you. All the best.
Happy New Year, everybody up there.
Hopefully, we talk to you soon in the next little while.
Okay. Thanks for having me, Fernando.
Okay. Thank you, guys. Take care. Bye-bye.